MBI.com. This is Jonas Reports for the 24th of August, and more of the same. We're still within this chart configuration, though, it's as bullish as you can get with the steel rising within it. If we get that crossover here, that could be a little more problematic for holding up at least to the 50%. The bigger drain has been the NASDAQ. The S&P has done okay to withstand this, and it's helped that we had the rising gold, but still extremes below 60 level here, creating the magenta was dark magenta, and what that really just means is that the previous lows are going to be retested. So whatever low you make when you have that, you're going to come down to it the next day or within the next cycle. So that's something that we look for. It's the same thing with the positive extremes. We had the positive extremes that took place, right at the beginning of the run, and we're almost. I think that we have filled it. What is the low right there? It was 29. Yeah. So not quite there. A little more ways to go. Yeah, that was correct, wasn't it? Yeah, a little 69.29. So we're still a little ways off of it. Wouldn't take much of a downdraft for that to fill it. So we'll keep an eye out for it. The NQ is the one that really took it out quickly, and uh, it still has ways to go as far as its positive extreme as well. So, but it's right at the 50%, and not in a situation where that 50% will hold. That doesn't mean you're going to break through it immediately or even today. It just means that as the readings are, there isn't anything that suggests that buyers are jumping in to want to save the situation at all. Most of it's problematic, and this oil represents it. This is the higher side of the acceptable range. Not that any of it's acceptable. And I think the impact of it is becoming clear amongst Americans. It's just strip their buying power away, and you hear CEOs complaining about by the end of the month there just isn't anything left over for anyone, because when it's going to energy, it's pretty much lost to the consumer, and it has a huge impact on so many peripherals that it's hard to underestimate in these terms, because people say, oh, your gas is high, but yeah, but it really impacts your ability to go out to eat, to do all sorts of other things which feed a whole variety of other actions. And so that's problematic. We even got to the food issues with the lack of petroleum moving through the strait and what it does to fertilizers that are produced now. Fine, U.S. not suffering from an oil shortage at all because we're exporting, but um, the refined products, it's a whole different story. It's a huge crunch right now, and no relief in sight. And the fact that, both in Russia and then in Saudi Arabia, the attacks are coming from, various sources. Obviously, Russia is with Ukraine, and Saudi Arabia, the Houthis are attacking their refining facilities. And it's a crippling effect. The euro, though, super excited from this because their war footing then makes a whole lot of sense, and that has driven it up along with the unsustainability of the U.S. debt. Your bond run, and that is basically saying that interest rates are at a level that it's pretty good, near impossible to sustain the $40 trillion debt. Particularly with the U.S. buying back its own debt and then issuing it as short-term debt because nobody wanted the longer-term debt. Yeah. So, you know, markets are going to require higher and higher interest rates. It's just not sustainable. It never was, but I think the acceleration of that becomes more poignant. What do they do? Well, that's going to be a whole other issue. And as much as Trump may think that he's got a cooperative Fed, I don't know that that's necessarily the case. Uh, Clearly reflected in gold. We expected this from way back when we were basing down here. It was just a matter of waiting for the explosion to take place, and we were following magenta. It stayed above yellow the whole way through here, and only now you're starting to see a little more short interest in that, but still very strong from a buy standpoint. So breakout started with the rising gold of the shakeout. Recognized that there was just a huge influx. Same thing with the BTC. We expected it was basing. There just wasn't anywhere left for it to go. Despite the gloom and doomers, nobody was interested in really getting out from where they were. And so it was just, what's your choice then? You could just buy, and all the conditions existed from a fiat standpoint now to justify it, and boom. Now you've got a secondary parking market. You've got cyan under red, always by configuration, and um, yeah, all pretty consistent stuff. No objections with it from a 50K standpoint. The day was interesting. We ended up with a little bit soft. They got a nice little run, hit the 50%, and that was just a wall. And then we just sold off from there, and that sell-off has continued here into the post-market. Still ready to go revisit lows right back here. No shock. Nothing too spectacular. From a 5K, it was pretty clean day. We go right back here. It was not that long, but we had a beautiful run up early on, and literally sold to the 50%. That still wasn't enough. We had a bunch of MBI weight spike over it, caused us to go right back down to the 0%, and then did it all over again, and then made a newer high, only to fill it right back in. So a little chaotic for the Asian session going in there, because it's just a lot of dynamics now, and depending on your time frame, depends on what your focus is. Broadly, structurally, the U.S. economy, and that has a lot of things set up for it, but near term, there's just a lot of headwinds, and how some of that deleveraging takes place is going to be really chaotic. I think that's probably the best. For me, from a 5K standpoint, it was 2,500, getting even tighter in there in that time frame. Very clean with the moves. These were just DOC spreads that were marked, working different configurations for where we begin to see the shift, the turnaround configurations. And usually it comes right about the green crossing back over, begins to set up your turnaround shifts. But very clean action from it, and very pleased with how that's developing. And we'll be putting together some of the automated configurations within the 2500 tick, simply because it just puts you so close to the action, so much ability to attack moves where you see like this DOC red, NBI red, the big below white, and then white moving over yellow, and that's just a continuation here as NBI white leads. Pretty clean and simple, same from a DOC spread standpoint. So started out beautifully like that, and that's just clean readings all the way through. And you're getting down to that 7.5. It could be at the potential start to cover zone. We'll see. Getting pretty deep here, minus 24. Usually you get a positive reaction from that regardless, but it doesn't mean that it's going to rally. It just means that you'll get a relief pop. Anyway, that's the long and the short of it. Going to continue to apply those, and once the strategy performance reports are all evened out, I'll show them to you and let you know where they're at. Have a good one. Trade well.